Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So this video I'm going to cover silver and gold. Silver and gold, especially silver, right? It continues to have a bit more of a pullback than I think a lot of people thought. I'm going to be covering that. I'm going to be covering the silver and gold stocks as well too. SIL, SILJ, GDX, GDXJ. And I'm going to talk about FOMO, and also I'm going to also share with you some simple patterns that form in the market that you can read just from the chart itself to help you give you a bit more understanding of what's going on right now in the market. So you're going to absolutely love that. Guys, very first link in the description. Right now, over the last few days, I've been running a web class that teaches you my #1 trading strategy, how I trade the market every single day. That gives me a 90% success rate. And also that talks about how you can get access to me as your private coach, weekly coaching from me. That ends at the end of next year. I've been running that for the last few days and I'm about to take it down because the spots that I have available have just almost filled. So this is one of your last chance. Click on the link in the description. Go join that next web class that I'm running. And if you would like to join that, then this is one of your last chances, okay? Now, let's get into silver here. What's been happening with silver? And this is one thing that if you've been watching my videos for the last probably couple of weeks, I've been saying, don't FOMO into the market. Don't chase the market. Don't chase the market. Don't chase the market. Wait for a good time. And all these people that come out of the woodworks, they simply say, where does that analogy come from? Woodworks. It come out of the woodwork. Come out of the whatever, right? They've been saying, oh, just get in, okay? Now, before you get into the market, you must understand two different types of things. Firstly, what is your active investment into the markets? Is it an investor where you're looking to buy and hold for many years? If that's the case, you just got to understand how the markets work. It's going to flow. It's going to go through run, and you're going to have pullbacks. You're going to have whipsaws and so on and so forth, right? So, because that's how normal, healthy bull markets work. They run, they pull back, run, pull back, run, pull back, right? And they do that. So you might be holding for 2, 4, 5, 6 years, right? Over the next say half a decade. You might be what we're calling an investor. Investor is where you buy, you hold, and you're going to hold for 5 or 10 years, right? If that's you, then you need to make sure that you're getting in at a really good dip in the markets, right? A really good dip in the markets, and not when the market's been going up, okay? Now, if you're a trader of the markets, if you trade the markets, okay, and if you're an active trader, well, that's a different set of skill sets, okay? A trader of these markets is all about understanding having a really good quality pattern that gives you an exact time to get in. And if it's a loss, when to get out for a loss, and also, what do you do to get out of that trade to manage it so you can consistently generate profit after profit after profit? Now, caveat on that. What I mean by that overall, right? So you may take 20 trades and you have a 70% win-loss ratio. That means 30% of your trades were losses, right? But what I mean profit after profit after profit is simply mean over time, right? So over say 10 trades, you had 3 losses, 7 wins. And so on and so forth. Makes sense? So however you are getting involved with these markets, what is your strategy? Are you more of an investor? Because if you are, you should be so attached to the day-by-day activity in the markets, okay? But if you're a trader, you're looking to trade for an income, well, that's when you need to learn some skills, which I do teach on my web class. I talked about at the start of this video, where you're looking for a certain pattern and a certain entry bar to get in. And then if it does go against you, you get out for a small loss, and then hopefully you can then ride that for a good profit. So you would have been in a situation where, like with a lot of my trades, is that even if I'm 50-50 right, I know that those 50-50 right, now by the way, I'm not, but even if you're 50-50 right, you want to be in a situation where most of your profits outweigh your losses. So if you're getting average of say 30% losses on an option on a trade, that's say your average loss, but your average profit is say 80% or 70%. Do you see how that works there? That's the way you want to approach these markets. So, and the reason why I bring this up is because if you're looking to get in on gold and silver, what is your investment strategy? How do you look to get involved with these silver and gold, which I do believe is going to be an enormous bull run over the next 2 to 5 years? The reason why I say 2 to 5 years is because no one knows how long it's going to last for, but I do believe over the next half a decade, we're going to see some enormous move within good pullbacks, okay? Good move up, pullback, good move up, pullback, good move up, pullback. Make sense? So that's what we're trying to do, right? And that's what you want to be able to look at the reality of the markets, okay? And so by looking at silver and gold right now, if you look at this here, if I go back to this chart right here, okay, so this is the SILJ chart. I've been saying that the market's pretty high right now and we're due for some sort of a pullback. And that's what we've been getting. It's not about me being right or wrong, because who cares about that, okay? What I'm trying to share with you is that whenever you're looking to get involved with these markets, right? These the markets is you never want to buy on a rip. You want to look on a dip. So wait for a good dip, and then looking to get into this one. Now looking at the GLD, same sort of thing, right? Just wait for a good dip if you're looking to get on the GLD for an investing type of position. If it's a trading type position, you wait for that pattern that you believe in. Don't have a pattern? Join my web class. All right, I'll show you my number one pattern that I look for, and so on and so forth. So let's actually look at this through here. So if I bring up, say, the 6-month view here, and I'm going to get onto now that powerful sort of reversal pattern that I talked about before at the start of this video, is if I look at, say, let's bring this up here, okay? If I bring up, say, okay, so look at this JNUG here, okay? I want to bring this JNUG up here, and this is where reading the chart itself is so powerful. It's so powerful. And there's so much information that the chart can tell you that no other indicator will tell you, okay? Over the last 15 plus years I've involved these markets, and my phone's going nuts here. Right, over the last 15 years plus of these markets, there is nothing more powerful, no other indicator out there more powerful than the chart itself. It's not a stochastic, it's not an RSI, it's not a MACD. You know, it's nothing out there, okay? It's not stochastics, it's not Bollinger Bands. Any of this sort of stuff is secondary, okay? The most important thing to you is, what are the buyers and sellers thinking? Because that's how the markets work, right? They flow, and the market is always telling us a story. So we have a run up in a bull market, right? We have run up and then we come back down, a higher low, a higher low, a higher low, right? Buyers are coming in, buyers are coming in, buyers are coming in, right? So it's raising their prices, raising their prices, raising their prices. And so what does that mean? That simply means, right, higher low, breaking past previous highs, higher low, breaking past previous highs. When you start to read that, it's like, okay, the buyers continuing to raise their prices here and continue to make higher lows, breaking past previous highs, that right now as we speak, the buyers are in control and they're pretty strong. But when we start to get things that we're not getting that right in the markets, when we start to get a higher low and then suddenly we start to get a lower high and breaking past previous lows, well, what is that? That's not an uptrend, right? That's not the buyers raising their prices. What is that? That's more of a downtrend, right? Lower highs breaking past previous lows. See that there? So if we look at the JNAG right now, right, we have a low, higher low, higher low. This here was some sort of higher low. This was an equal low, right? So firstly, look at this here. Notice how we had this low here. This low here was much significant lower than that low there. Was much significant lower than that low there, right? So we definitely had a lot of, there was a lot of sort of space here. Makes sense? So between here and here was the space. So the buyers were coming in stronger here, coming in stronger here. But then notice the next low when it came down to pretty much like a double bottom. That alone is a warning signal. Makes sense? Because now it's not a high low anymore, is it? No, what is that? It's more like a double bottom. Now, if we have a double bottom in the markets, okay? Think about this for a minute, okay? If we have the market run up, make a high low, breaking past previous highs, pretty strong, right? And then what do? Then the market runs up, it comes down and makes another high low, breaks past previous highs, pretty strong, right? Higher low, significantly higher low, significant high low, significant high low. But what happens if the market comes back down to here and makes a double bottom? Is that now a higher low? It's not, right? It's the bottom. What is that telling you, right? What is that telling you in the scheme of all things? It's telling you what? That the momentum is now starting to slow in that direction. Again, if this is on the daily chart, which it is on the JNUG, I'm just using the JNUG right now for an example, but Whenever we're looking at the markets, all right, whenever we're trading the markets, we want to be able to gauge what that stock is doing right now. Just because the S&P, the Nasdaq, the Dow, the GDX or whatever, analyze the individual stock based on the individual stock. Okay, now you can apply this to any market, any time frame. But when you're looking at the market and the market starts to do these patterns, and it's not making a clear high or low, what is the market telling you? Okay, remember the market's always right, we're always wrong. All right, so what is that telling you? It's telling you what? It's telling you now that momentum is starting to slow because it's not making a high or low anymore. What is it? Pretty much some sort of double bottom through here. Then what happens? It runs up and then it starts to make what? A lower high. Hang on a minute, a lower high, and then it starts to break past previous lows. So see how right here was an early warning sign that the trend may be coming to an end. That short-term trend, okay? Now, that short-term trend coming to an end could last 1 week. It could last for a couple of weeks and before the buyers kick it back in again, okay? Based on that longer-term chart. On that weekly chart, we can see we're probably starting a big bull run. But the shorter-term chart, maybe getting ready for a bit of a breather, okay? This is what we call trading skills. Investing skills, look at the weekly chart, wait for a good dip, buy into it, and let it go. This is called trading skills, right? And the most important thing, as you can see, it had nothing to do with the moving average, nothing to do with the volume. It has everything to do with what? The price itself, because the price is always giving us some sort of story, and it's up to us to, if you want to become a good trader, the most important thing to me when I'm trading the market is to forget anything I think or hope or fear in the markets and say, okay, market, you tell me what's going on. So look what happened here. We made a lower high. We made a lower high through here, and then we broke what? Broke past previous lows. So who's in control right now as I speak? The sellers, right? Now, the sellers are there for the short term. That's the reason why it's so important to look at the daily chart and the weekly chart. We know the weekly chart is way overextended, so we're just going through what? Just a nice healthy pullback before the buyers probably do that. So we may get a little bit more down movement before we start to have a more upward movement. Make sense? But the whole purpose here, right, is to see what the market is telling you, right? Look at this here. Lower high, lower high, lower high, some sort of lower high. What is this? What is up here? Higher high, higher low. Notice how we went from a what? We went from a lower high, lower high, lower high to what? Higher high, higher low, breaking past previous highs. See that little gap up there? See that little gap up there? What do you think that is? That's now the buyer's what? Changing trend, right? We've gone from lower highs. Guys, it's so, when we start to look at this here, it's so important to read, to continue to flow with what the market is telling you, especially if you're trading the markets. You're looking to get in and get out on a short-term basis, maybe for 2 to 5 days or for a couple of weeks. You're looking for a trade, to get in and hold it for even for a couple of days. You know what I mean? That's it's so important now because you're flowing with what the market is telling you, because the market is always right, and the market is always giving us some sort of a sign of the trend is still strong, or the trend may be ending. Just because the trend is ending, what does that long-term chart say? Because if that long-term chart is saying we're in a big bull market, we're just going through a nice healthy pullback, well, this little reversal here is probably likely, right? Is probably likely to be very, very, very short-lived. Make sense? So I hope you can see what I'm saying through there. And as you go through the analysis, right? As you go through the analysis, you can start to see different situations and different things forming in the markets, right? Like, look at this, look at the JNUG up here, and the GDXJ. What happened here, right? Higher low, breaking past previous highs. Higher low, breaking past previous highs. Higher low, breaking past previous highs. Higher low, possibly some sort of double bottom. What is this up here? Double top, and then it rolled over. Notice how we actually had one, and then we had a last push, and then as the market started to come down through here, YouTube said, hang on a minute, we just made a big double top through here. What does that mean? Now we're breaking past previous lows. What does that mean? It's coming to an end. The trend is coming to an end, right? This short-term trend. And every short-term, again, this is the daily chart here. That weekly chart, once again, guys, it's a different kettle of fish. It's the weekly chart is simply saying this pullback here is probably going to be short-lived, right? Maybe a few more down days or a few more weeks for a pullback, and then maybe a continuation from there. Make sense? So as you can see, right, this is some of the simple but most powerful things you can do in the markets, and it has nothing to do with any indicator. The indicators in the markets is not going to give you the proper signs of what's going on in the market more than more than the chart itself. Because what is the chart? The chart is a representation of what the big guys are doing, not us. We don't push the market around, right? The big guys. And so what we're doing, we're trying to see what are they thinking and what are they feeling. Makes sense? And so from that process, you can start to see, okay, cool. You know, we're now going through that process, you know, and so there we go, guys. I hope you really can see here from just by understanding these simple little things in the markets, okay? These simple little things in the markets that when you're starting to trade the markets, the chart itself, okay? So, and as you can see, right, it just comes back from having just even a black bars on the charts. And even if you just want to go just to back to a blank chart, just like this here, right? And then just bring it back to complete nothing on the chart. Oh my goodness, John, it's bare bone. I can't believe that. Nothing on the chart. Why? Because you want to be able to say, okay, let's go to the GDX here for a minute. What happened here with the GDX? We had what? We had higher low, breaking past previous lows. Resistance here became support. Breaking past previous highs. Resistance here became support. Breaking past previous highs. What happened here? Ran up, went sideways, broke back down. What is this here? This is called now a false breakout. Notice how it didn't run up and then come back down, did it? No, it broke up and then came back down. And then guess what happened? Now we're starting to break past this previous low. This now is the first. This here was the first warning sign that this daily trend is now coming to an end. And then suddenly when we start to break these lows, the buyers are definitely not raising their prices. Because remember, in a good bull trend, high, low, high, low, high, low. Makes sense? So now the market is telling you, hang on, something is different here. Something has changed. And it's so important for us to listen to the market. And it comes back down to that. So as you can see, one of the most powerful things that I can do as a trader is to do that. And so I just use an open highlight close. I use black bars and a complete white screen. No grids, no nothing. I don't want any colors or anything in there for me to be able to process. I want to be able to process what's going on with the charts right now. And what's the story of the market? What are the big guys thinking and feeling? So I hope this helps you out, guys. As you can see, that it's these important trading techniques to help you as a trader. Who are you? Are you an investor or are you a trader? If you're an investor, wait for a good dip, buy it and then enjoy the rip. If you're a trader, it's so important to read the market as it is right now, but have a very, very, very simple but powerful pattern and also entry to get in where you can minimize your losses and then maximize your profits in that. So, and guys, make sure you join my next web class with the first link in the description below. I'll share with you what I look for to help you out, guys. All right, guys. All right, that's it for me today, guys, and I'll speak to you soon.